Yes, good evening, guys. Welcome to this week's edition of our weekly forecast. And today we're going to be covering up the dollar, and we're also going to cover Euro USD. We're going to cover USD JPY and gold. As you all know now, our main analysis, our main forecast is based on what the dollar is doing. How is the dollar moving? What momentum, what bias does the dollar have? So, looking back at last week, I didn't do a weekly forecast for last week for the main reason of FOMC, NFP, and a couple of banks had reviews on their interest rates. So last week was a bit of a hectic week in terms of doing a weekly forecast because I wouldn't know what the fundamentals are going to do in the market. So now, looking at the week ahead, when we take a look at what the dollar did, we saw a rally on dollar. We saw a rally. Excuse me. We saw a rally on dollar during FOMC. Whole of last week, dollar rallied all the way to 98.75 price level. But can you see the rejection which happened come the end of the week? We had a clear rejection of the 98 level. And if you look on the chart, I'm on a weekly chart right now. When you look on the weekly chart, look to your left and you're gonna see why there was such a strong rejection on the 98 zone. There. That's why we had that rejection. Price hit the supply demand of 98 on the dollar and price plummeted to the downside. There was a clear rejection of higher prices. Looking at it from a technical point of view, you can clearly see we've got a trend line there. We have our trend line. There was a clear rejection of the trend line resistance. You see, we had a clear rejection of the trend line resistance to the upside. So market tumbled to the downside. So what does this signify then? Now, as much as the dollar is the king, as much as this guy is the king, we are now, or rather, I'm now expecting some weaknesses to come in on the dollar. Yes, this bull run that we have had has been facing some resistance of late. The bull run on dollar has been facing some resistance, quite heavy resistance. You see this area here, and price did try to shoot up, but there was resistance to the downside. So I'm really expecting weakness in the dollar in the coming weeks. Coming 2-3 weeks are going to tell us exactly where the dollar is going to be headed in the long run. As of now, this trend line resistance has held, meaning we are going to be anticipating shorts to the downside on the dollar. I'm expecting market to test at least in the coming week, I'm expecting market to test at least these highs to the downside, all the way to this previous week's low. Yes, there's not much of fundamentals that can move the dollar that much, so expect a gradual move to the downside when it comes to the dollar. So this is on a weekly chart. Let me go to a daily chart so that you can clearly see what I'm trying to explain. There we go. Now on the daily chart, you can clearly see the rejection that I was highlighting on the weekly. We had a rally. The past 2 weeks, dollar was in a rally, a strong bull run. But once it hit that trend line resistance to the upside, Thursday and Friday, market tumbled. You see, this is not a coincidence, guys. For those who are in the mentorship group, you can clearly see what we mentioned. FOMC, Powell and Company, they pushed price high, right? Powell and Company, they pushed price high. Now when the US delegation came back from the trade war talks in Hong Kong, what happened? Just one tweet from Trump and the mention of new tariffs, dollar plummeted. Not that Trump wants the dollar to be weak, but when this happens, remember Euro USD here. Remember Euro USD. Those in the mentorship, they know exactly what we are talking about. So it's not a coincidence that Thursday and Friday we had a correction to the downside on the dollar. It's not a coincidence. If you follow your fundamentals perfectly, you clearly understand what I'm trying to put. So I'm expecting this weakness in dollar to continue in the coming week to test these highs. I'm expecting price to test those highs, continuing to the downside. So right now there's more room for dollar to push to the downside. There's more room for a weakness in the dollar. I hope you can clearly see what I'm trying to say here. There's more weakness to the downside. These lows will probably be under attack in the coming week or 2 weeks. 2 weeks at least. Next week is going to be a bit of a long stretch for price to test these lows. But in the coming 2 weeks, I'm really expecting dollar to test those lows. So now, what are you going to do with the dollar? Right, this is what you do. From a daily perspective, when price returns to the 98.70, 98.60 price zone, expect market to tend to the downside. And you know what that is going to do to the Euro USD, USD JPY, and gold. We are going to get into that shortly. But our main focus, so that we frame out the bias of our next week's trading, is here on dollar. This guy is our key to trading the other pairs of our portfolio. So a rally in dollar to the upside and testing the 98.60 or 98.70 price zone offers better short opportunities to the downside. You see, I would expect to see market to at least push to the downside before another crash. You see, so where's that crash supposed to head to? To these highs here. You see those 3 marked highs. I'm expecting dollar to test these highs. So the bias for the upcoming week on dollar is bearish. We've got a bearish bias on dollar in the coming week. You see, we had a fee movement to the upside, break out of the trend line, came back inside the trend line. So I'm expecting price to keep tumbling to the downside. So now on the 4-hour, you can clearly see what we've got on the 4-hour chart. we've got pockets of supply that have been created. We've got pockets of supply that have been created in the market. We've got a supply zone there created here, and then we've got another supply zone here on the rejection point. See, we've got another supply zone here. So now when you look at it from a lower time frame perspective, let me go to H1 and then you're going to see what we are talking about. Right, there we go. So now when you look at an H1 chart, so expect price to at least test these price zones. This one could be a long stretch, but this guy can be tested quite nicely, and then price pushes to the downside. So look at the 98,100 price area. 98,100 price area for potential shorts to the downside. That's our main interesting price level on dollar. 98,100 to 98.20. If 98,100 and 98.20 is engulfed to the upside, or price breaks through and closes upside, then we are looking at 98.60 all the way to 98.70. I hope that's clear enough. So take note of what the dollar is doing on this lower time frame. Mark out your supply zones that I've highlighted. Make sure they are perfect, and wait for price. See, that's the most important thing. You must wait for price to come to your levels. Now let's take a look at what this will do to the other assets, which are Euro USD, USD JPY, and gold. So I'm going to take a look at Euro firstly. Now when we look at Euro, right, since we had a bull run in the dollar, we've got a bear run in the Euro. Price has been pushing to the downside. It's clear, you can see this, guys. You've got your trend line there, higher low, higher low, higher low, higher low, lower low, lower low, lower low, lower low. Definition of a bearish market, a bear run, in other words. So since we are now expecting weakness in the dollar, also notice how Euro USD has rejected the $10. For those in the mentorship group, remember I always mention the US has got a problem if fiber hits $10. The US is going to have a problem, or they won't accept euro at $10 at this moment in time. And you can clearly see, let me mark out the zone. You can clearly see from what price is telling you. Remember, guys, price action. Learn to read the structure. Learn what the market is telling you. Learn to read the structure. You can clearly see we've got a supply demand here, and that's where price rejected. Remember, guys, this is a weekly chart. This is a weekly price move on fiber, and to get this kind of a rejection, the one where we are currently, this kind of rejection on a weekly chart, that is quite significant. You see, that is quite significant. And us as traders now, we must look to benefit from that. How do you benefit from that? By diving down to lower time frames for perfect entries into our trade. So now, expecting weakness in dollar, then we expect Euro USD to recover a bit from the bearish run. So now let me go to a daily time frame. There we go. You can clearly see price dipped into the demand and there was a rejection right at the $10 price. There was a clear rejection there. You can see FOMC pushed price into demand, right? Then Trump and company corrected the market to the upside. $10, remember, the United States will never accept $10 at this moment in time. You can clearly see these lows here. So you can practically see that last week's events, namely FOMC, NFP, and the trade war negotiations, those three events were clearly used by market makers to do stop hunts. In instances of Euro USD where they stop hunt to the downside and market rallied. So I'm expecting another clear rally to the upside. They're not going to come back to this low here. No ways. No ways. Price is not going to come there. You see. So I'm expecting Euro USD to recover a bit in the market. So these highs are targets. So Euro USD in the coming week, we've got a bullish bias on Euro USD. I'm expecting price to push all the way up. But from which entry points? Any dip to the downside into the $10 price levels is a perfect entry to the upside, with your stops 10-15 pips below $10.290. You see where my red line is, so you can practically say $10. That's where your stop loss should be placed on Euro USD, and expect price to rally to the upside. So entry points for our long trades on Euro USD, we are looking at $10.75. $10.75 is going to offer better opportunities to go to the upside. You see, Friday's low, then we take the market to the upside. Now let's see what that looks like on a H4 so that we can perfect our positions. Okay, let me just zoom in a bit so that you can clearly see. Now look at H4 chart. Let me get rid of this guy here, then you can see. Now you can clearly see on H4 chart we've got pockets of demand that have been created. See where the demand there, where the demand level created there. Now let me highlight the other one. We've got demand created there. Remember our definition of demand and supply and demand. An area where price dips into and rallied massively away from without even turning back. Now let's go to an H1. There you can clearly see the rally on these price levels. You can clearly see here this rally here is demand, this rally here is a demand. You see, so any dips into $10.80 is an opportunity to take market to the upside. A close below the 1.1080, then you look at market to dip down all the way to $10.45. Then you take it to the upside. It can't get any clearer than this, guys. So you must be in a position to read the structure. I know most people, they like to trade lower time frames, but lower time frames are just there for you to perfect your entry points. Most people spend time on 15 minutes and then they'll be like, oh, but how did that happen? You see, because you're not looking at the big picture. You see, 15 minutes, you can clearly see now the demand zones that I have been highlighting on the H1 chart. You can clearly see there's your demand level created. So when price dips down there, you're looking to take the market to the upside. This in turn is being supported by the weakness we are going to get, that I'm anticipating on the DXY, which is our dollar. You see, so a close below this low here, close below these lows. So I'll be looking at $10.45 for entries to the upside. You see, this demand area here. So that's much about it. When it comes to the fiber, we're looking at 1.1080 for long entries. We are also looking at 1.1045 price area to take the market to the upside. Now let's look at gold. Right, we are bullish on Euro USD. That means we are also gonna be bullish on gold. We are going to be bullish on gold. You can clearly see last week's close was strong bullish to the upside. You see, 1392 price zone that I've been mentioning in the past forecast, the three weeks weekly forecast that we were talking about. I mentioned that price will reject at 1392 price zones, and that's exactly what happened. Price dipped into the 1390s, and there was a clear rejection to the upside. So I'm expecting market to keep up with this momentum to the upside, pushing all the way high to let me get my point there. Right, so I'm really expecting gold to push now, since we're expecting weaknesses in the dollar. I'm expecting these highs to be under attack in the coming week on gold. That means 1480, 1490 price zones, or even 50. Gold could reach 1500 per ounce in the coming week. So bullish bias is the focus on gold in the coming week. So now let me draw the areas that you need to look at, the zones that you're gonna be having to focus on. So we are on a weekly chart. You can clearly see we've got a trend line here. Right, there we go. We've got trend line support there. Now let me go to a daily time frame. Right, you can clearly see we've got a trend line support that's running from 1380 all the way here. We've got trend line support. This is on daily chart. Now you can see we have demand here. Demand was created during the rally on Friday, Thursday, I'm not sure. You see, we had a strong demand area from the trend line. Now I'm gonna go to a H4. Right, there we go. You can clearly see now. We also have another demand that was created on Friday towards market close. We had a demand area created here. Sorry, my drawing skills are not up to perfect right now. You see, we had a demand area created on the 1430. So you can clearly see 1402, we had a demand area created. So now for long entries on gold, you're looking for price to dip down into 1430. We are already all the way up to 1446 right now. 1440, 1446 was like the almost 1450 was like the high of the week. So 1430 is going to offer good opportunities for market to go to the upside, and 1410 is quite a long stretch. 1410 to 1406, this is going to be quite a long stretch in gold, because we're going to clearly see something like this before a push to the upside, and I'm expecting that to happen here. Then we have a strong push to the 1500 per ounce price level on gold. So 1500, guys, is not it's not much of a tough price to ask on gold. It can be reached quite easily. So our bias on gold for the coming week is bullish. We're going to be looking for long entries from 1430 is going to offer good opportunities. For those who are conservative on their trades, 1410, 1406 price zone will offer better opportunities. So that's much about gold. So now let's look at USD JPY. Right, USD JPY weekly time frame closed strong bearish. We had a very strong bearish close on weekly chart for USD JPY with almost no wick to the downside. That shows you that the bears are in control of this market. The bears are in control of this market. So now we are clearly in a bearish bias. We are in a bearish weekly order flow on USD JPY. So we are going to be looking for short trades. That December 2018 low could be well under attack in the coming weeks. This low here, as you have all seen that on AUDUSD and NZUSD, we had a quite test of the same crash that happened in the market a while ago. So now we are on USD JPY. We are going to be looking for short trades on USD JPY. I'm expecting the weakness on the yen to continue in the coming week. So let's see what that looks like on a dollar. Right, you can clearly see price took out these lows and closed below. Price took out the lows and closed in a strong bearish to the downside. So that becomes our end area of interest. You see, when market is tumbling to the downside, it creates what? New supply zones. We took out a demand here. This demand has been engulfed. You see, supply and demand, students, that demand area has been engulfed and taken out. So what do we expect price to do? We expect price to correct into the demand before another crash to the downside. This is what I'm expecting on USD JPY. I'm expecting price to test that 107.40 price area. You see these highs? I'm expecting price to test that before another move to the downside. So now we are on a daily chart. I'm also going to highlight this supply area here. And remember, guys, take note of these areas that I highlight. See, we have another supply there. That could be a long stretch in the coming week though, because those two bears from Thursday and two bear candles from Thursday and Friday, they will hold. These two guys, they are going to hold in the market. They won't be easily taken out, but we expect market to correct a bit, something like this, you see, before another crash. We expect something like that, you see. So now we have highlighted our supply zones on the weekly chart, on the daily chart, sorry. Now I'm gonna go into an H4. Right, there we go. There's the engulf that I've been talking about. You see, we had a clear supply zone created, then market closed below, and that zone was created by when they were taking out this demand zone. You can see that this demand zone has been engulfed here on a daily time frame. There's the engulf, which is more of like a drop base, and then we're gonna get another drop base, so short trades on USD JPY are advisable from the 107.2 price area. I'm expecting price to test these highs before another crash. We are not gonna get this move, guys, no ways. You see this in the coming week? No, we're not gonna get that. There's gonna be a correction, a retracement of that, at least to these highs here, before market continues with its momentum move, down momentum to the downside with its bearish move. So don't expect to get like 1, 2, 3, 4 hour candles that are gonna move and recorrect to the upside anytime soon on USD JPY. No ways. That's not gonna happen. You see, the events that could have such an impact on the markets are the ones that just happened last week. So short trades are advisable on the yen from 107.20. Now let me go to a H1 time frame on this one, so that you can clearly see where you can either enter the market. Right, let me get rid of this one here. Right, and highlight. See this supply area here? Can you see where it is? Let me just say this whole area here. That's our supply zone. Can you see where it is? Where it's located? The high of I think it's Friday, if I'm not mistaken. Yeah, we've got the high of Friday, which was formed during the Asian session. You can clearly see it here. You see, we've got the high of Friday, this high here that was formed on Friday. Then we've got this area here. Let me highlight that also with the shape 2 rectangle. Then we have this pocket of supply here. Now let me get rid of this big guy here. You see those two areas that I've marked? Those are gonna be your best bet to take the market to the downside. If price closes above here, then look for price to retest the 108.200 price zone and then move to the downside. So 107.40 to be precise, 107.40 is a very good area for short trades. 108.200 for those who are conservative, those who are not aggressive with the market. They will look for price to retest 108.200. Remember, guys, this is not a case of saying, okay, no, Ivan has mentioned 108.200 or Ivan has mentioned 107.40. So I'm going to strictly wait for price to hit 107.40 or 108.200. No, guys, price can go to 107.35. It's an entry. It's a good entry to the downside. You see, it can hit 107 37, or price can hit 108 100. Those are good areas for you to take the market to the downside. Yes, it's good to wait for the precise price that I'm going to mention, but that is just like a rough guideline. Because if you wait for, say, 108 200, price might never reach there, but it will reach 108 115. And then you'll be like, oh, I missed a trade. Yes, you would have missed a trade, but that also is a good entry point to take the market to the downside. So you must have a leverage on your enterprise. Don't be exact to the pip of the price that I mentioned. No, you're gonna lose trades. You're gonna leave money on the market, on the table. You see. So that's our forecast for the upcoming week, guys. So we are bearish on dollar, and we are bullish on Euro USD. We are also bullish on gold, and we are bearish on USD JPY. I hope you understand perfectly. For those who have any questions, the guys in the mentorship group, if you have any questions, just hit me up on the Telegram group chat, and then we can see what is it that you are struggling with. And for those who haven't yet joined my mentorship, inbox me if you are interested. We are quite a collective community who are willing to put in more efforts in learning the markets, how to trade the markets using institutional supply and demand. And I urge you guys to subscribe to the channel. Just hit the button below there, subscribe to the channel, and you make sure you click that bell icon so that you receive notifications of any videos that I record and upload onto the YouTube channel. And make sure you subscribe, guys. And for any comments, queries, suggestions, comment below, and I will attend to it. Have a great trading week, guys. Last week was an eye-opener for most of you, but that's exactly what the market does. It gives you some eye-openers to the workings of the market and provides good opportunities in the coming week. So yeah, that's much about it. Make sure if you have any questions, let me know. Just comment below in the comment section, and subscribe to the channel, guys, if you want to receive instant updates from my channel. Once again, thank you for listening, and happy trading, everyone.